So what is currently happening to Workhorse Group Stock is just insane. After getting shorted down by Wall Street, it performed an incredible run of more than 7,800% from lows at the beginning of 2019 up to its highs in February. And although it didn't take long for the stock to recover from those astonishing prices, we are now seeing some incredible gains again, being up about 14% intraday as well. So what we are going to do today is give you an insight into what is actually happening to Workhorse Group Stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is as always crucial to consider before buying the stock, make sure to stay tuned. Before we jump right in, however, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. So we are dealing with an amongst investors extremely popular delivery, describing itself as the future of delivery. It uses delivery vans that are 100% electric, with a purpose-built design allowing for maximum cargo space and easy access for the driver. As far as functionality goes, Workhorse's product line appears to be very attractive. Adding smart systems allows the company to know where their vans are at all times, and maximizing routes carries a lot of value for Workhorse's clientele. But, and this is crucial for our prediction at the end of the video, the stock then headed downwards, selling off almost 80% from its highs. And that's what we want to take a look at now, before we come to the current recovery in a second. So since highs in January, Workhorse Group Stock has been on quite the downward trajectory up to about the end of last month. Bearishness amongst investors in the EV space is one factor, but it's important to consider that that's plagued this sector broadly of late. However, Workhorse also lost out on a major postal contract to Oshkosh Defense in late February, as mentioned before. This has been a key catalyst for the recent drop in the stock. Indeed, as a company that's still getting production figured out, orders are what matters right now. Accordingly, investors seem to be shying away from this stock on a lack of order flow of late. And in regard to the current valuation, Workhorse is still a tiny player amongst some pretty large giants in the EV space. This could provide the right kind of setup for long-term growth investors looking for value in this space right now. And after pulling back so much, investors' optimism grew substantially. As shares were now changing hands for a much more reasonable price, tons of people got back in, driving the price up to about $15 right now. But there is one major factor that is also the main reason for all of this: the hype from retail traders. With tons of mentions on forums like Wall Street Bets, such incredible gaps became possible, also making shorts cover their position to boost the price even higher. As this is also very important for the prediction at the end, taking a look at forward revenue estimates of $282 million in revenue for 2022, the stock trades at about 5 to 6 times sales. That's not incredibly expensive for a growth play in the EV sector with an e-commerce catalyst overlay either. Additionally, Workhorse reported a cash position of $215 million during its recent earnings release. There's some indication this cash should provide the short-term growth capital sufficient for the company's needs in the short term. As mentioned before, having a war chest is a good thing, and Workhorse doesn't look like it will need to raise capital in the near term. So Workhorse focuses on providing the last mile of delivery in a way that's as environmentally friendly as possible. Given the surge in e-commerce and long-term growth prospects of this sector, investors are looking for ways to leverage the logistics and distribution surge that will follow. And doing so via an EV option seems like a good idea. If you want to buy for the short term, however, you need to consider the current volatility and massive jumps in price the stock is experiencing. Alright, with that being it for today's video, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot, and see you next time.